A couple of weeks ago, I made a video called China's economy is about to collapse. And in that video, I basically covered the $9.2 trillion Ponzi scheme that the economy was accused of running. People were protesting on the streets and asking the banks to give them their money back from housing projects that weren't even started yet. Today, it is roughly 15 days ago since I uploaded the first video. And that means it is time now to give an update on what potentially could be the biggest real estate crash the world has ever seen. Which is exactly why the Chinese government just injected another $145 billion in stimulus into the falling real estate market. I truly feel sorry for all of the people in China that is affected by this situation here. And the pain that they're feeling now will eventually be felt by the rest of the world, because this situation here is much worse than what the economists first predicted. The consumer confidence is now at a multi-decade low, and that basically means that the citizens, well, they have lost faith in the economy. The home sale is already down by 40% this year, and real estate accounts for roughly 30% of China's total GDP, and real estate is also the largest assets for the majority of the Chinese people. So a recession here will be felt by the average person in China. Even the founder of Huawei, the largest privately owned company in China, said that this collapse will be felt by the rest of the world for the next decade. My last video was basically about the $44 billion bailout that the Chinese government gave to the developers to finish all of their unfinished projects, and the most recent $145 billion stimulus check to get the economy going again. In today's video, you are going to find out that this amount is extremely small in comparison to what China actually needs to save their economy and thereby save the world from a massive recession. If you like today's video, then please press the like button below the video and make sure to subscribe to my channel if you want to see more videos like this one in the future. With that being said, then let's start talking about the actual problem in China. China is one of the fastest growing economies in the entire world. Their GDP, gross domestic product, that is a measure of the total amount of products and services that a country makes, grew by 9.1% in 2021. Just for comparison, well, then did the US have a growth rate of 5.7% in their GDP in 2021. The important part here is not how fast they are growing, but more so how they are doing it, because that is through real estate, which has a total value of $60 trillion in China. That sounds like a lot, and it is a lot. The real estate market in China is so big that it is more valuable than the combined net worth of all the listed companies in the US. And the US stock market is so big so that it represents 56% of the world's total stock market, with a total value of $48 trillion. We often hear about how much power and how much influence the US stock market has on the rest of the world. But just try to imagine how much power the Chinese real estate market actually has on the rest of the world. The Chinese real estate market represents roughly 30% of China's total economy, which also happens to be the second largest in the world. Right now, more than 60 real estate developers have more than $13 billion in debt, which is due before the end of the year. It is also estimated that the home sale is going to go down by 30% at the end of the year, and that is even worse than it was in 2008. The current situation in China is much worse than what economists first had predicted, and the reason is that the home sales have already gone down by 40%, and now it is going down by another 30%. And the experts never predicted a situation like this, or even one that is close. The Chinese government will then need to get their money out of real estate and into something else. But the problem is that 70% of their money is tied up within real estate. To give you an idea of just how bad the situation is, well, then several economists have found that the completion rate, so the total amount of completed buildings in 2021 and 2022 was roughly 50%. Since the economists, they have a very rough idea of the price of these projects, and they know how many of them were financed through mortgages, well, then it becomes possible to get an estimate of just how bad the situation actually is. And right now, the combined value of all of these mortgages that is attached to these unfinished buildings, well, they amount up to 1.6 trillion yuan, and that is roughly 1.5% of China's total GDP. That number is way too high, and it might even be high enough to cause a global recession. But here is when it gets even more crazy. If China continues with this completion rate of roughly 50% until 2024, well then is this amount going to jump to 4.4 trillion yuan, which is roughly 4% of China's total GDP. All of the data that I just represented is basically thanks to Tom Orlik, who is a chief economist at Bloomberg and known for providing articles and podcasts about the global economy. As I talked about in the introduction, well then there is another problem in China. A recent report came out about the corporate earnings in China, and it is looking really bad. Roughly 4,700 companies in China just reported that their earnings and their profits are just as low as they were in the Great Recession in 2008. Just in this year alone, we've had roughly 900 companies reporting a net loss in earnings. This is even worse than the pandemic in 2020, where we had 780 companies reporting a net loss in earnings. You would think that these companies should have performed worse in 2020 than what they're doing now, but they're not. However, there is a really good reason for it. And that is China's zero COVID-19 policy. And what that policy includes will blow your mind. First, if there was even a small outbreak, well then would the government put the whole area on lockdown. Second, only one person per household may leave the house once per day to buy groceries, if this person has a negative COVID-19 test. Third, all businesses must be closed, with the exception of restaurants that are allowed to bring takeout food. There's also hospitals, pharmacies and supermarkets that are allowed to be open, but the rest must be closed down. Even though you might not be thinking that much about the COVID-19 pandemic anymore, and you might not be affected by it, well then there is currently more than 60 million people that is on lockdown. And you would think that the Chinese government would at some point get rid of this policy, but even when an earthquake hits that kills 75 people, they were still not allowed to go outside their door. And all of the effects from this COVID-19 policy has a massive effect on the companies. They have to open and close their productions all the time, and they are basically suffering from it. At the moment, the current situation is not looking good, and it looks like it could be really rough, not just for China, but also for the rest of the world. Basically, then all of the data and the majority of economists are pointing towards that there are massive problems in China. So it is going to be really interesting to see what the government decides to do about it. But one thing is sure, and that is if they don't do anything about it, then the economy will collapse. But the truth is that this is a very complicated situation, and no matter what they do, well then will people end up getting hurt. I hope that you liked today's video. If you did, then please press the like button below the video and make sure to subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.